Hi, and welcome to this week's look at the major news stories in the market so far. And what are we going to concentrate on? Okay, well, starting with the NASDAQ 100, and that's had a pretty good week. Then secondly, we're going to look at the US dollar against the Canadian dollar and what's been happening there, and of course the impact of inflation and interest rates. Thirdly, we'll take a look at WTI crude oil. Quite a bit going on in the oil market. We've spoken about it regularly lately, but some more updates for you. And we're going to end with NVDA, a stock that's been in the headlines quite a lot this year and had another good report earlier in the week. So let's start with the NASDAQ. On Monday, we exceeded 16,000 for the first time in 2023. Good news, great performance. This is mainly a big news in the AI field, which we know has been a driver so far this year. If you haven't heard, Sam Altman, the co-founder and CEO of OpenAI, was fired on the 18th of November. Off the back of that, several senior OpenAI employees announced their departure shortly afterwards, basically in support of Sam Altman. Now, Microsoft, who invested $14 billion in OpenAI early this year, was said to be outraged and in fact rushed to hire Altman as the head of their own AI division. Since this has been happening, OpenAI employees, basically they consider the board incompetent and have asked for the return of Altman, or they themselves may well leave also for Microsoft. Quite big news in the AI field, and market participants may well believe that Microsoft in particular, but also AI technologies in general, will receive more benefits long-term from these changes. And in fact, Microsoft and NVIDIA reached new highs on Monday too, predominantly off the back of this movement, this news. We've also obviously got Fed policy. And the fact that Fed's, or the expectation is, the Fed will no longer be raising rates is leading to investors actively exiting cash markets. And as the NASDAQ's outperforming the S&P 500 at the moment, that indicates that tech stocks remain massively desired buys for these investors. Let's take a quick look at the chart, and that seems to indicate or show that bulls are losing some momentum. The MACD is forming a potential divergence, and the price dynamics earlier in the week, in sort of afternoon November the 20th and morning of the 21st, formed a bit of a rounding before the FOMC decision. Now, of course, no increase in rates there at all. We also need to remember that it is Thanksgiving holiday in the US Thursday, Friday, so markets will be substantially quieter. Post-holiday volatility could be seen, and that could well see a test, based on what the chart's telling us, of the strength of support at 15,750. Now, we've held above 16,000 just in time for Thanksgiving, but I think there's certainly going to be some price dynamics and price action next week, so don't forget your risk management techniques. Okay, now we're going to take a look at a currency pair and the US dollar, that is, against the Canadian dollar in particular. And again, we're seeing currency rates being driven by inflationary pressures and the actions of central banks. Now, the Bank of Canada Governor Tiff Macklem said on Wednesday that enough may have been done to curb inflation. Now, this certainly fuels some expectations that the rate has peaked in Canada and provided some confidence to participants. Thus, the Canadian dollar strengthened relative to other currencies, including the US dollar. Wednesday also saw some unemployment data out of the US, which saw non-farm payrolls being positive 209,000 against an expectation of 226. So whilst under expectation, it still shows relative strength in the labour market. But the dollar didn't strengthen off the back of that. And in fact, the US dollar index is still in a bit of a downward trend. If we take a look at the chart for the US dollar against the Canadian dollar in particular, that shows strengthening Canadian dollar. And in fact, has pushed that rate closer to an important support zone, which is being formed by the lower line of the ascending channel, which we can see in blue, pretty much where the rate has been since August in that channel, as well as a support area, which is looking at in purple, around the level of 1.364. Now, at the same time, though, the stochastic RSI indicator has dropped into the oversold zone, and the chart seems to be showing us some prerequisites of the formation of a rebound from a technical analysis perspective. Now, if that happens, and if it's strong enough, the price may reach the resistance of 1.375 in the near future. As we're saying, the dollar seems to be weakening, the US dollar seems to be weakening at the moment because of the lack of increase in interest rates. whereas CAD, reaching its peak potentially, has strengthened the Canadian dollar. That's to do with uncertainty, that's to do with market expectations. But any news around interest rates, any news around inflation rates is clearly going to have an impact moving forwards. So keep your eyes and your ears open. Little change in direction now. Let's take a look at a commodity and let's look at oil. I agree, somebody probably saying again, and in fact, WTI crude oil. And the price seems to be forming a reversal pattern. Now, obviously, we have spoken quite a lot recently about oil, including earlier this month of November, when we said we could see it recover to $80 per barrel. In fact, on November the 14th, the price fell short of that $80 by only about 36 cents, the median line of the channel halting momentum. When this sort of bears come back into force, we saw a new autumn low of about $73 per barrel formed, but the price quickly recovered back to that median line. It's in a subsequent fall this week to $75, which again was quickly recovered, indicating there is still some bull and demand strength out there. Now, at the same time, the price appears to be forming an inverted head and shoulders pattern. Now, that could lead to a bullish breakdown of the current descending channel, although worth noting, first we need to overcome the resistance from that medium line, which has been pretty strong so far, and a psychological level of resistance at $80 per barrel. Also factoring in the possible that the simplified moving average 100-day is directed downwards. So why this sort of volatility, why this chopping and changing? Well, one of the key drivers is going to be the OPEC Plus meeting, which interestingly has been postponed to November the 30th from this week. Now, it is reported that some members are dissatisfied with the current policy of cutting production, which has been in place for a while, trying to drive that global price up on oil. I think it's fair to say that volatility is ahead, particularly with regard to any news related to OPEC Plus countries, and obviously that OPEC Plus meeting at the end of the year, of the month, not the year, sorry. Oil's going to be choppy, volatility is going to return, so don't forget your risk management techniques, and as ever, keep your eye on all of the news sources that you possibly can. Okay, and lastly for this week, we're going to take a look at NVDA, a stock that's been, well spoken about for most of this year. But NVIDIA shares declined after a strong Q3 report. If we take a look back to August, the second quarter report gave the high of the year back on August the 24th. And we had the Q3 report this week. And in fact, earlier in the week, we had some pretty positive movements in the terms of the share price, as I've already mentioned in the earlier video about the NASDAQ. So what did the report say? This is the important stuff. Well, earnings per share came in at $4.02. That was against a forecast of $3.37 per share. Gross revenue came in at $18.12 billion against a forecast of $16.18 billion. So strong positive figures. However, after the report, we saw some bearish dynamics come into play. Now, why was that? Well, perhaps these figures, whilst being positive and above expectations, disappointed some overly optimistic investors. Or perhaps we were looking at people locking in profits, riding the wave of 2023 so far, and particularly off the back of the price action earlier in the week over the AI news and the NASDAQ 100 performing particularly well. In fact, the price fell 2.6% after CFO Colette Kress said sales to China would drop drastically in Q4. And this is off the back of the recent US government export controls. Obviously, China is still viewed as a huge market. So these sort of statements you can see maybe had a slightly bullish, slightly negative effect on the price of the share. Take a look at the chart. Well, that shows that the price fell below $480 per share on Wednesday, despite that good report. The price is also near the median line of the ascending channel, which has acted as a resistance just this week alone. Now, that channel's been in action since May of this year, excluding that back end of October, where we can just see it fell out. But if the price holds above the $480 level, that could mean the CFO's comments or statement have caused only a short-term correction in the market. We could well attribute it again to a little bit of profit taking. And then we see a gradual increase along the median line. That could be a sign of a strong market. Certainly, of course, because there's a flip side to every coin. The price could continue to decline to the lower border of that channel. We saw this sort of bearish action after a strong report 3 months ago. Great great initial reaction, price went up, and over a period of time, we slide back down to that lower line. Clearly, there's an awful lot going on out there. A good report, yet falling share prices. So it's important to take all the factors into account. And don't forget your risk management techniques. We wish you luck with your trading in the week ahead. Bye for now.